Welcome back. As promised, let's get chatting with the management of Ramkrishna Forgings. It has incorporated a wholly owned subsidiary to implement and complete the acquisition of JMT Auto under the corporate insolvency resolution process. The company also in process of adding some more capacity to their existing business itself. We have with us Lalit Khetan, who's the CFO at the company. Thanks a lot, Mr. Khetan, for joining in. First up, it's a good thing that you've received some approvals for completion of this acquisition. Just wanted to understand, by when does the entire acquisition come into your fold? What's the overall money that you will be spending on this, including renovations as well as Capex?
Yeah, so we have already got the approval from the COC, Committee of Creditors or Lenders, and it's with the NCLT for the approval now. And we hope in next 3 months' time, the approval of NCLT also should come for this unit. Oh. And for the total outgo for this is 70 crore upfront we have to pay and 55 crore over a period of 4 years. Apart from that, about 70 crore we have to invest in renovation of plant and machinery and working capital.
Got it. All right. So, hi Lalit, good to speak to you. So, so it appears you're going to be spending close to 200 crores in all, everything inclusive, right, on this particular asset?
Yes.
Okay. So, at peak levels, what kind of revenues can it do? And say it gets closed out in the next 3 months. You'll have this asset for the entire year in FY25. So what is the revenue potential you can get, point number one? And in FY25 itself, how much of the revenue can you realize?
Yeah, so if it closed out in 3 months' time, certainly it will be up for running in FY25. We will take FY24 to renovate it. And the peak revenue can be done at around 600 to 700 crore from this unit when the optimum utilization is there. For FY25, we are looking at 250 odd crore of turnover from this unit.
And you'll break even at 250 crores?
Yeah, certainly, because it's a quite high value product making company and they make a lot of value add in the forging. And even they have a very good oil and gas plant. And so we hope to make at least 30% EBITDA out of this plant.
30% EBITDA at peak level, and obviously below that would be slightly lower, right?
Yeah, correct.
Okay, and you have incorporated a subsidiary to keep JMT in it, but you're also looking at a lot of other potential assets in the CIRP, the insolvency place?
Yeah, we have one more already pending in Supreme Court, that is ACIL Limited. Okay. So for that also we have a subsidiary. So we are acquiring all our company under CIRP through subsidiaries only.
And what is the total money that you've earmarked for all these acquisitions?
For ACIL, again, we have to pay 110 crore. Again, 85 crore will go upfront and 25 crore in deferred payment over a period of 5 years.
And renovation and revenue potential of that business?
That I think is very low because that unit is up and running. So we need to invest about 20-25 crore more for renovation.
And what kind of revenue can you get from 110 crores plus 25 crores? So 135 crores is what you'll spend on a running and the plant is up and running. What is the revenue potential out there?
That can again go to 500 crore when it's at optimum capacity.
When does it go to 500 crore?
Sir, it's really, it is taking time right now in NCLT. So we are keeping our finger crossed in next 6 months it should happen. And so 500 crore can come in FY25 or FY26.
So in FY26 from ACIL as well as from this other acquisition that we're just talking about, JMT, the total revenue that you can get will be closer around 1200 crores. And that could potentially be realized in FY26.
Correct.
Right. And what about your current own business? I mean, you had announced a new capacity addition. I remember us speaking about it by September 2023. It is likely to, come on stream. And the potential peak revenue of that business could also be close to around 5,000 crores at current commodity prices. So what exactly are you looking at in terms of long-term revenue plans? 1,200 crores, as Nigel pointed out, in FY26 coming in from these acquisitions, your current revenue plus some organic growth there, plus this 5,000 crores coming in on account of the capacity expansion. What are you looking at?
No, 5,000 crore is the total turnover we are reaching from the current capacity.
Okay.
And that 1,200 crore will be additional. So what we are looking at to grow at a CAGR of around 20% per annum. So by FY26, we should reach a 5,000 crore top line from the current capacity itself. And these JMT and ACIL will be extra.
So around 6,200 crores in FY26.
Yes.
Okay, and rough margins, blended margins, if we could get that number from you.
Sir, because I am not calculated the blended margin, but for RKFL standalone, we are looking at 23 to 24%. We are hoping to improve from here on from 22%, another 100, 200 basis point. And from ACIL, it will be again in the range of 20 to 25%. And JMT, what I said, it can be in the range of 25 to 30%.
All right. Just wanted to understand a couple of things in your business right now. What exactly is the content per vehicle, to the companies that you supply? What's the potential there? And railways as well. You've doubled your top line from railways. What's the potential? How much does it currently account for? How big can it be?
Content per vehicle, we are around at right now 70% in terms of overall CV content. And that's we are talking about the body component or axle component, because we are not into the engine component. And about the railway, so we have big plan with the railway, and what we are looking at right now this year, we are going to do a top line of around 75 to 100 crore from the railway. But next year we are looking to doubling this top line, because railway are having quite a good plan for procurement, and we are quite bullish. And we are also getting orders and approvals from the railway. That's why we are thinking 200 crore will be very much achievable next year from the railway.
All right. And what about EV? How much will EV contribute in this total 6,200 crores that we were just talking about? It's
About
only
5%.
it's only 2% currently of revenues. So when you go to 6,200 crores, you're saying around 300 crores will come in from EV?
No, 5% of 5,000 crore.
5% of 5,000 crores.
250.
Got it. And, your non-road, off-road segments, you have mining as well as excavators, etc. How big are they currently? How big will they be? I'm just trying to figure, because you have EVs around 5%. Railways, you said, could be around 200, 250 odd crores going forward. The non-highway mix could be how much for your business?
Yeah, off-highway will be do very good, because we are doing a lot of work on the off-highway. All together, taking railway, off-highways, and other like construction and mining industry equipment, we are targeting to achieve a 30% non-auto. That includes oil and gas also. So that we are target by FY26, we should have a 30% non-auto.
That's a significant target, that you have 30% of your revenue coming in from non-autos by FY26. And final question then, with the kind of debt that you have on your books, what's the repayment plan?
See, we are already past our peak date. And with the kind of earning and kind of projections we are having, we are going to reduce debt from here on, and at least 150 to 200 crore will go down every year.
All right. Thanks a lot, Mr. Khetan, for joining in and giving us all those details of your business. Wish you good luck with all the mergers and acquisitions, your capacity expansion, and the target that you have of over 6,000 crores by FY26. Simple to a short break. Come back as we do that. A quick programming note for you. The 14th of March, CNBC-TV18 will host what will be India's largest summit on gender parity in Delhi. Women leaders from all walks of life will come together to brainstorm and help take decisive steps to bridge the gender inequality that exists in India and across the world. The event starts at 4:30 p.m. on the 14th of March, and you can catch all the live action right here on CNBC TV18.